Okay, so we are here with something new. Hopefully, going to be doing these on a monthly basis. So Jeff, you get the Korea stats, I guess, on the 15th of each month. That's when they're released, and you put together these visuals. So, what are we looking at right now? And I guess we're just going to kind of go through them one by one and analyze, try and draw some conclusions and some guidance for the average consumer on what's going on in the Canadian real estate market.
Yeah. Every month around the 15th, Korea puts out new national stats, right? And so we have this tool which you can find online, which is just meant to help you digest all the numbers more easily. What we've done is we've picked out, like, for February 2022, the key trends that we're seeing. Dan's going to provide some of his industry expertise here. So the first one, we're really just looking at, the national HPI benchmark price, which has been tracked since 2005. And the dotted line we're seeing is the historical trend line. And obviously, with what's happened since mid 2020, we're just far above what that historical trend line shows us. So in February 2022, we hit 869,000 as the national benchmark price. And to me, it's just crazy to think that, back when the pandemic was just starting, so like say December 2019, the national price was 556,000. It's a massive change.
Yeah. And I think the big question that everybody's asking is, are we going to see a reversion to the mean? Will prices come back to that trend line? Like the last time that you see them break that line, they whiplash back pretty quickly. Now we are obviously much further above the mean. I think it takes us a long time to get back there. And I think that that's a good thing, right? Like, people calling for a crash, I don't know if it's just not functionally possible in the Canadian market, but I don't think it's unheard of to see a long-term erosion in price in Canada. And that's how you get back to the mean. And that creates a safe market for people to trade in and out of. I don't think anybody wants to see other Canadians lose a bunch of equity in their house overnight, right? So I think that eventually we're going to end up back on that trend line, right? Like that's how markets work. When and how is the big question. We're looking at a recessionary Canada probably in the next couple of quarters. Interest rates are rising, and they've naturally been inversely correlated with prices. And you're seeing a lot of things change in the micro environment. So, I would assume that we're going to end up back on that curve. I think that most people should be hoping that takes a long time to get there. Something like what happened I think the only time in Canadian history where a house was worth less after 5 years, so a standard mortgage term, was from 1989 to 1994. And if that were to happen, as an example, I think, it created a lot of financial stress, but it was financial stress that could have been mitigated by, better decisions, carefulness, less FOMO, less bullishness, right? And that's the way that I think we need to be thinking as Canadians, having a healthy relationship with real estate over the next couple of years.
So on this one, we're looking, in the last chart, we were seeing the actual price over time. Here, we're looking at the month-over-month change. And so where this is useful is just to understand how quickly prices are accelerating or decelerating. So if we look back a bit to 2017, we had the spike here where at the peak, home prices changed by 3.4%. In February 2022, we actually hit 5.3% month-over-month change. And obviously, that's not something that can continue, because typically when we've seen those peaks, it drops back down for a few months. Yeah. But just to put it in perspective, 5.3% month-over-month, that's something like 85% on an annualized basis.
Right.
Which is, so hopefully we're seeing just prices start to decelerate quite quickly soon.
Yeah, and I think, like, I don't know if anybody's really claiming that there's a degree of sustainability to those prices, right? Like, I think that you hear the odd TikTok realtor or whatever who think, but people who say that kind of growth is sustainable don't know what they're talking about. Like, that's pretty simple, right? Like, housing can grow in ad infinitum with inflation, right? And we have no fucking clue what inflation is. And I'm not supposed to be swearing because this is a more formal thing, but we have no clue what inflation is tracking at in Canada right now, right? And so until you have clarity on what that is, I mean, yeah, house prices could be growing at inflation, not at 80%, but maybe at 20%. It wouldn't surprise me if that was real inflation. It wouldn't surprise me if real inflation was 30%, right? Like in Canada, like, so it's hard to get clarity on what's happening here. But from my perspective, what's important to note is when the last time we saw growth of this magnitude was and what happened as a result. So ignoring last year but I think actually, because I think that the second highest peak in the market was 2021, right? February 2021. I don't know if you can hover that there. But if you look at Feb 2021, you saw basically in last year's spring market, we were seeing in Ontario at least, and in most areas, lockdowns were happening in January, February, right? So there was some weird stuff happening in the micro. It kind of forced people into house. A lot of people are joking about housing becoming, Canada's pastime, but people are locked in their homes. The only thing that you can do is go look at houses, really, and search volume. You talk to Jason Billingsley from Zillow or look at the realtor.ca data. Search volume on real estate websites was like out of or growing completely out of ordinary with what the spring market's doing. So you saw what happened was, and if you look at the price cyclicality of what a typical spring market looks like, you usually see a peak in search activity in April, May, and you usually see a peak price in those times as well. And you always see this sinusoidal kind of movement throughout the year in prices because people buy bigger houses in the spring because they want to move in the summer between school years. That's when families are moving. So there's a composition skew in the data. What happened was you saw that demand pulled forward into February because of lockdowns, because people were being anticipatory. Oh, we want to maybe move before the next lockdown, want to get out of the suburbs or get out into the suburbs for the summer or whatever it is. So you have in the short term, you have an example of a whiplash that happened, right? You're looking at from January to February, prices growing, whatever it was, close to 5% in 2021. And then it drops to almost zero month over month in the next month, right? Whatever that month is there, where the trough is right along the yellow line. I'm not sure if you can hover that one, but so whatever happened from February to March, right? Yeah. So you go from 5% to 0.2%. And if you go back to the peak in 2017, you see the same thing. And that's where you actually start to see negative growth whiplashing as a result of this. Was a little bit different because it was a policy introduction that would have caused that. But it's important to note how quickly things, like usually you see a recoil as a result of excessive growth, right? The market will automatically correct to sustainability. And I think that people need to be paying attention to the fact that, okay, yeah, we've seen outsized month over month growth. It might be important to start paying attention to what's happening there and what typically happens historically after that happens, right? Like, it's easy to get wrapped up in the FOMO, but a lot of people, and a lot of people probably who are buying during that period of time are like, shit, I've had to waited, like, look at all the supply that's available now. Yeah.
And I think it's important to look at this piece here, right? We haven't seen a month where prices have fallen since April 2020.
Right.
So almost 2 years where every single month prices have kept risen, right? So yeah, eventually, I mean, looking back, we've seen that for some periods in the past, 2005, 2007 here.
Yeah.
But that was followed by, many months of price declines afterwards.
Yeah. And I mean, that's I think that if you look back there and you start to see that seasonal cyclicality evolve where prices do come down a little bit in the summer when the markets, in certain markets, and you have your spring and fall. But, you go back to that 2008, you're in a global recession at that point. Are we going to see a global recession in the global macro right now? Yeah. I mean, I think it's pretty damn certain. The writing's on the wall, right? Like we're already relatively recessionary. S&P is blowing off, all major indices. We got a war going on. Like, I think that there's a lot of things that, it's easy to be ignorant about these things and think that Canadian real estate is immune and have the flight to quality thesis. But the reality is, like, at some point the music's got to stop. Right. And, we're trying as hard as we can to keep it playing, but I don't when people are blowing each other up and stuff like that, you can't really hear the music over stuff like that.
So this one, we're looking at Calgary. So this one's been popping up on everyone's radar again. It's just been a market that's been, pretty stagnant for essentially a decade, right? Some months where prices are growing, then quickly declining again.
Yeah, and you can
Just a
kind
lot
of
of ups
see
and downs.
yeah, you can see it, like you can see the cyclicality, right? You can see the seasonal cyclicality in there.
Right.
It'll jump over the line and then come back down from your spring market. But the last major change, and I think, first, as soon as I saw it, I was like, I need to understand why that's there, right? And so I asked you to pull up the crude oil prices. And I think it'd be amazing if you could chart these two side by side, because I think what we're seeing right now, two important notes, right? One is, I mean, you can see almost the exact same spike in this chart here, right? Like the way that this looks is where you start to see that mass migration of people employment into the oil sands, right? And then, if you return to the Calgary chart, you can see like right now we're seeing an oil price spike, but I think that one of the most important things to look at there is, okay, yeah, like you get this huge exodus of people, right, moving in a couple of months, and then you see, so in Calgary there, you can see people buying for 2-3 months at a time, right? But then eventually those people are all out working, there's not like, and once that happens, the market settles and things recoil pretty quickly. And then the question becomes, and this is where you have to examine the macro a little bit more. I think it was like eight of the past 12 major recessions since the modern financial system was founded, or since the Industrial Revolution, were accompanied by or followed a major oil price spike, right? And so you often see, and if you look at the global financial crisis, oil went from, I think it was like 100 and 120 bucks a barrel back down to like 40, more normal pricing. I think it was 40 bucks a barrel. I think the oil sands are only profitable above $80 a barrel. I could be wrong on that, but I'm pretty sure it's 80 bucks a barrel. Are we going to stay where we're at forever? Probably not, right? Like demand's going to start to taper off as we get recessionary. So I love Calgary. I've always loved the market. I think it's an amazing Canadian city. I think that this chart shows me how impulsive Canadian purchasers are. You're seeing so much people are looking for the next get rich quick scheme in Canadian real estate. And it strengthens my thesis that we have an extremely unhealthy relationship with housing in this country, and that we're just so late cycle. And the sentiment, all it takes is for major sentiment erosion for your blog TOs to stop writing articles about how people made 100K in a month flipping a house and start, nobody's going to be publishing the articles about people losing 100K in a month. But once those are the things that are happening, once those are the conversations that are happening at Thanksgiving dinner, etc., that's when things start to get bad here. And I think that this shows me where that the people are just out there seeking, right? It's like a low volume pump on a penny stock, right? People are out there just looking for the next thing.
Yeah, I would say though that given how Calgary prices haven't followed the trend like this that we've seen nationally, right? This does seem like a safer market to me. Just because, I mean, there's not that many major metro cities within Canada, right? And this is one of the last affordable options.
I would agree with that.
Still out there.
I would agree with that. Yeah. I mean, what it tells me about sentiment makes me fearful, but I love Calgary as a market. I think it has a lot of upside just beyond oil, right? Like, and I think it's the fourth largest major metro in Canada. You've got a lot of industry there. The weather's actually better than Toronto weather. I think as a result of the kind of the warm wind coming over the mountains. I think the city's got a lot of growth potential. I just don't know if I think when you start to see large droves of capital that don't understand the market moving there quickly, like what we're seeing right now,
yep,
it just tells me a different story about what's happening. But in the micro, yeah, absolutely. I think Calgary is a great market.
So here we're looking at Toronto, and obviously you can speak best about what happened in 2017, but just wanted to point out here that in February 22, we actually surpassed the peak that we saw in 2017.
Yeah. I think that, when you look at the Toronto chart, it's way more pronounced to see the blow off from the non-resident speculation tax in 2017. A lot of people would argue that the speculation tax isn't what caused that blow off. I would say that it is, but to me, it doesn't matter. I think that the market would have corrected regardless. But the tax was the final nail in the coffin. We're seeing a run up in supply, opportunistic selling, which I actually really feel like we're seeing right now. And so at least in the GTA, people start seeing prices, they start hearing that their neighbor sold for $1-2 million, whatever, they're like, shit, I'll take that price all day long. And then you start to see the fishing trips happen, right? And so now you've got 10 or 20 houses flooding the market that are all underpriced and having a bidding war. And then maybe there's only 20 buyers left in the market because of that whole spring market demand got pulled forward. And you created this frenzied spring market. It's exact same thing that happened in 2017. That pushes the prices up. Opportunism sets in your March, April. And the same thing happened last year with the price run up in February, March. And by the time we got to your typical spring market, when most sellers are preparing to sell their houses, most people want to sell their houses in the spring. It's annoying to get your house ready to sell in the winter. The market had already come and gone, and that happened last year, and that happened in 2017. But the thing is, sellers don't know what buyers are doing, right? They don't know they don't know that buyers are out there overpaying, because it takes us a bit of time for the data to show up. You start to see the sales, people are like, shit, I'm going to prepare, but sellers don't have the same agility as a buyer. A buyer can move from one listing to another listing instantly, whereas a seller has to say, okay, I need a month to prepare my house for sale. Even if you're doing it as fast as humanly possible, you got to get, staging, declutter, take your pictures, all that stuff, right? It's going to take you maybe a week minimum, right? So the responsiveness is what creates that delay. And now you've got a lag. Now you start to see a supply flood. That supply flood that's happening today is responding to probably February prices, right? Maybe March prices. And then what happens is, if you've got all these underpriced listings, because of the way that we structure our pricing, like the blind bidding war thing in Toronto, the bids are starting to disappear, right? And now properties that were spending 7 days on the market are now spending 14 days on the market. So your inventory starts climbing, and new inventory is continuing to come on because it's just the spring market, right? And that to me is the thing that I think most people are ignoring with the GTA specifically, is how quickly we can get to a balanced market supply if you're turning over properties, if your absorption and you're with 1 month of supply and 1 week absorption period, let's say. All it takes is for your absorption to double and for your supply to double, which happens as a result of bidding wars failing in the spring market, for you to end up in a balanced market within 1 month. Just 1 month is all it will take, right? So not that a balanced market is gonna crush prices, but that's how downward price discovery starts. And I think that's what people need to be thinking about. Like I think you'll see that curve. I think you'll see negative price. I don't know if it'll be probably March to April where you'll see negative price growth in the GTA. Yeah.
I mean, I was kind of expecting it to come in mid 2021 here, right after a few months of falling or deceleration of prices.
Yeah.
But the market proved to be pretty resilient in the fall, and just kind of bounced right back up, right?
Yeah,
so
I mean,
it's really hard to tell where things are going to go. And
the challenge is, like, this has all its classic bubble. Like I actually would say, like, I think UBS incorrectly characterized Toronto's real estate as a bubble. I think that Europeans are out of touch with Canadian property, or like what the Canadian market is like. They don't understand why everybody wants to immigrate here. Like, they don't think about us as where they were 40, 50 years ago, right? Like the place in the world that everybody wants to live. But I think that right now that Canadian real estate is behaving like a bubble, and it looks like we're sort of in a melt up phase. You have frenzy, you have FOMO, you have everybody's talking about real estate, right? Like, it's, to me, this is that main, you can't, it's an unignorable mania, right? And so it's just, the government is probably trying extremely hard to engineer a soft landing right now. I don't think that they are capable of doing it. I think that the best thing that we can hope for is that we have slow rate hikes, Canada gets recessionary, and we see a gradual erosion in price that allows people to offload properties in a healthy way to avoid financial stress, right? That to me is like the best case scenario.
So Korea, for the first time in February, part of their monthly release, they actually included Halifax and Nova Scotia stats.
Right.
So happy to see that in the mix, because I mean, I think that's just another key city where they've seen so much change in their housing market in the past few years, right? And we haven't been able to track that very well. But now, looking at this in terms of year-over-year basis, what we're seeing for Halifax, Dartmouth, is, they hit over 33-ish % year-over-year change starting in 2021. So, I mean, what does this tell you? Do you have personal stories about people moving from the GTA out to Nova Scotia?
Yeah. And I mean, and you talked to, like, I've been talking to a lot of agents from across the country, and the story is, on GTA buyers are coming to X town and they don't care about price. Like, Toronto to me is the epitomic bad relationship with housing in Canada, right? And so we are so detached from reality and risk, and you know what I mean? Like, and there's a lot of paper gains. People are coming here, they're cashing out of equity and they're going there. So they can be detached from risk because they don't give a shit, right? They just realize 2 million equity in a levered, and that they put 200K into 3 years ago, right? And so you can go to Halifax and overpay for something because you don't really care anymore, right?
Right. I mean, we're seeing like the benchmark price was 460,000, right? So if you just cashed out on a Toronto home that you built some equity in, this
Right.
is a very easy purchase.
Right. And so people are going there, and like, I think that I don't think most people analyze this, what happens in their subconscious, but you see a city with a lower cost of living, a lower house prices. It's like, it's compelling to just go there and to get in, and whatever it takes to get in, they're doing. And so it's easy to introduce a much higher bid to the market. And I've heard some agents that are doing 40+% of their business to only Toronto to Toronto buyers, right? So, and like, other reports of people doing the majority of their business, but like, powerful local agents that would have, be local business people are doing 40+%, right? Ottawa, I got a report from somebody that said, I think it was like 37% of his buyers came from the GTA in the last 6 months, right? So it shows that portability of capital, right? That's what I was talking about with Calgary, right? People are, they want to get the house, but they're seeking that next opportunity in the Canadian market, right?
So here what we're looking at is, on the y-axis here, we're looking at the benchmark home prices.
Yeah.
The x-axis, we're looking at the month-over-month change. This is for February 22.
Mm-hmm.
And what we're seeing again is, almost every single city except for 3 here saw prices increase. And if we look at where that's concentrated, it's mostly in like the mid-priced markets here. But then again, even the higher markets, such as Oakville, Milton, still 3.9% month-over-month change. Toronto or Mississauga, 7.9%.
Yeah.
So yeah, widespread, but it seems to be mostly these mid-market cities. Yeah. And then surprisingly, the cheapest cities are the ones that have actually seen prices decrease slightly in February.
Yeah, and I think to me, it's a greater indication that you're seeing exhaustion on the price floor, right? First-time buyers are tapped out. We're fed up with the product. It makes more sense to rent and wait it out and whatever. Like, even if the market doesn't correct, most people would, or obviously a lot of buyers would rather exit the market and take the risk than buying a product at current prices. I think that's a very clear story of what's happening right now, right? When you start to see price growth and inflation happening in the higher priced markets, the more upscale markets, Oakville, Mississauga, Toronto, or the whole GTA, that to me is indicative of what you were seeing in 2016, 2017. And it creates higher stakes, but it also creates more room, a greater magnitude for that recoil to take place, right? If you're, on a $1 million house, there's not as much margin for error. There's a lot of people willing to catch the falling knife. You've got way more buyers below $1 million than, in your $2 million product. The absence of a bid becomes a lot clearer as prices are coming down in the higher end market, especially if the people who are below them see those prices coming down, their prices are coming down. They're not able to realize their equity and step up into that product anymore, right? So it becomes like sort of a trickle down how that happens. And you saw it happen in 2016 in Vancouver as a result of their foreign ownership tax. And I think prices just recovered or still haven't recovered to that luxury boom in Vancouver. And then I think, and that's apples to apples comparison, obviously. But in York region, was the case study for 2017's blow off in the GTA. prices just crossed the line of what they were before there.
So yeah, here we're actually comparing those various cities, right? Looking at the 5 major metro areas.
Yeah.
There's a few stories that stand out here. Obviously, we looked at Calgary earlier in more detail. That's one, I think this highlights it pretty well, right? We're seeing the other 4 major metro areas trend upwards. Calgary was very flat for a long time. And we're only just starting to see acceleration in recent months.
Yeah.
Another thing that stands out, if you look at Toronto here, it's actually surpassing Vancouver for the first time. When we look at just general home prices, if we flip to something like a single family, Vancouver is still far ahead. But when we consider the overall market, Toronto has certainly caught up recently.
Yeah, and I think, like, to me, again, it comes back to that, like, that sort of detachment that we've felt from just like having a healthy relationship with housing. But and if you examine the micro, Vancouver and Montreal being good examples, those are cities that are actually limited in their ability to grow. Everybody's talking about Toronto becoming a world-class city, the Manhattanization of Toronto. A Manhattanization of Toronto functionally can't happen because there's no limit to the land mass, right? Like, I mean, there's a lot of land. Toronto will become a massive city, but it's not going to do it in a fashion like Manhattan. And Vancouver and Montreal, their cores are on islands, right? So, like, I think that they're and that shows up in other asset classes. So to me, like, I think that's where, Vancouver detached, like, if you look at the freehold detached in Vancouver, there's a lot more room because there's actually a limit associated with that. There's still people buying and building detached homes in Toronto on vacant land, right? So, like, I think that it's not I don't think there's as much of a functional or geographic protection mechanism in the Toronto market as there is in other markets, right? In regards to Calgary, I'm interested to see how this plays out, especially, like, kind of rolling it into our conversation with Halifax. I agree that there's probably a greater degree of protection in Calgary as long as it doesn't continue growing like this, and as long as oil doesn't really suffer, because I think that a bit of that price is associated with that. But Halifax, I mean, I think that we're starting to see this renaissance period for Canadian cities to establish their own identity with the new generation of consumers, right? A lot of millennials are moving there with the intention of starting families, new household formation, etc. And to me, that's an important part of the entire Canadian story. I think that a lot of these markets will do exceptionally well. I don't think there's not as much froth to be erased, I guess, is sort of what, whereas, Toronto, Vancouver, there is, right?
Yeah, and there's actually an interesting comparison. So Halifax and Calgary, right. I just noticed for the first time, right? Like, what's happened, like, obviously we've had buyers like leave Vancouver, Toronto for cheaper markets, but seems to have happened overwhelmingly in a place like Halifax compared to Calgary.
Yeah, I think Calgary's just starting to see it because of oil, right? Like, the challenge is, if you're going to move to a market, you still have to economize in that market, right? Like, if there's no jobs, and Calgary wasn't like a super great job market until oil started ramping up again, right? Like, and so whereas Halifax is a little bit different, it's a lot closer to Toronto, so it's an easier move, right? And I think that there's a sectoral difference, right? Like, it's easy to move from a career in Toronto to a career in Halifax, whereas it's not as easy to move from Toronto to Calgary, nor is it as easy to move from a more proximate city like Vancouver to Calgary and, continue working within the same sector. But, wage inflation and people wage seeking in the economy can push a lot of that into a market like Calgary, especially when you're getting a recessionary job market coming, which I believe we'll start to see happen, right?
So in this one here, we're looking at various Ontario cities.
Yeah.
We've looked at, like, the drive till you qualify aspect of the GTA.
Yeah.
So here we're looking at Barrie, Greater Toronto, Hamilton, Oakville, and then I just threw in Ottawa. And Ottawa's still like a 4-hour drive, but to me, it's just it's like, at what point is it just not worth it? Where the drive is 2.5 hours from Toronto, and you just start considering like another city like Ottawa.
Yeah, I mean, I think you're starting to see it happening regularly now, right? Like, and that's the conversation that a lot of people are having. And but I think the other important part of the conversation, and this is what really needs to be discussed in regards to the suburbs, is you're starting to see a reurbanization of demand as well. People are bullish on offices reopening, right? A lot of people, and the thing is, consumer sentiment is very interesting. People can form their own conclusions about what they think is going to happen. And you're starting to see more and more of this, people wanting to move back into the cities. And so from my perspective, I think it's anybody's game at this point, but I think we've kind of tapped out where people feel it's appropriate to still be within commuting distance of the city.
One last one for you here. So we're looking at, the price change in the past 5 years here. So since February 2017. Looking at the top here, we're seeing some markets have essentially tripled, like London, Tilsonburg, of course, Bancroft. Looking down below, we can see, the vast majority of markets have increased at least 50%, with actually most of them at least doubling in 5 years. But there's one city down here which has seen price decline. Just wanted to have you guess, what is that?
I think it's going to be Charlottetown or Regina, maybe Edmonton, but probably, I don't know. I guess I only get one guess. Regina.
One guess. Did you go on the website? Because you got it.
I didn't, but I was like, because I knew you were going to ask me. I was kind of studying some of the other charts. My original guess was PEI, honestly. So, or would have been Charlotte.
Yeah. Right. No.
And I do like those other charts that you skipped over. So we'll have to get to those in next month's market report, because I think we can still kind of tell the same story about townhouse product in your Montreal, Vancouver, etc.
Yeah, definitely.
Montreal and Halifax. Okay.
Well, good chatting. We'll chat next month.
Time. So yeah, I'll let you go, man. Thanks a lot. This was really fun.
Well, take care.
Yeah, take care, buddy.